And I've clicked the start recording button. So now I can give you an official welcome to our May 2nd International Online Forum Group. It's so great to have you with us. Again, my name is Stan.heller and I'm broadcasting from Lethbridge, Alberta. That's me in the front row. And we have my wife Corey behind me, and our son Jamin, and our daughter Jaleese as well. And Jaleese is the writer, creator of the Investing for Retirement search that is um, part of our retirement model portfolio. So great to have you all with us. Okay, sorry, just reading some more of the comments there, and everything is good, it looks like. The model portfolio, I'm going to get into that, Ron, so I'll show you that today. So listen, let's get going. We tried something new with the kiosk approach here to the slides as you came into the room, so hopefully that was okay. And I did see that a lot of you have gone directly to the YouTube channel, VectorVest YouTube channel. We're glad to have you with us there as well, and I'll try to get on there as often as I can and answer your questions. I'm just kind of by myself here today, but just more people coming into the room, and once the room fills up, you will have to go to the YouTube channel, which is why we display it here prominently, and that's how it's working. But listen, I hope everyone is staying healthy, and you and your families, and you're all staying safe. It's wonderful to do well in the markets, and we need to do well to build our portfolios and for all different reasons. But the most important thing is the health of everyone, and we certainly wish you all the best in that regard during this difficult time. More people coming in. That's so great just to see you all. Yep, I will paste that in there, Alessandra. Paste that into the YouTube chat. That's a great idea. It's a bit confusing with the numbers and capital letters and then small letters, so definitely I will do that. Thank you. All right, so the questions and comments, I think most of you are used to our GoToWebinar format now, but just know you type your questions in here and send them here. This should collapse on you to give you more screen space, especially if you're on a single monitor, and you can move it around. Just open it up and click in the top bar. You can move it to the side and that sort of thing. But if you do lose sound or audio, please do log out and log back in. If you have too many tabs open other than what we're doing here, that could be a problem for you. So please be aware of that. Bronco, good to have you from Naples. That's awesome. We really do have an international audience, and that's what makes this international forum so special, quite honestly. I just love putting it on for everyone. And we do have a very special guest again today. Dr. Barbara Starr is one of our favorites and a friend of the VectorVest community. She's done, I think, 5 presentations already for VectorVest, the creator of the Starr search that's so popular and it works so well even in these difficult markets. And she's going to give us another trading style that is quite suitable for the kind of volatile market conditions that we're in. So we're very much looking forward to that. And just a quick risk disclaimer, there certainly is risk in investing. We've learned that in spades over the last little while, even the last couple of days. And so just know that you and you alone are responsible for your investment decisions. We don't know your risk tolerance, your financial situation, but we will give you everything we can for educational purposes, but it should never be considered investment advice. Oh, and there's Paul from Ireland. Gee, that's awesome. So the purpose of these monthly forums, it's to further your knowledge of the VectorVest system, to share current ideas and strategies for making money and I think even more importantly, protecting wealth. And I did kind of write about that this weekend for my Friday essay, and I'll share that with you. Create opportunities to interact and share ideas with other members of our VectorVest community. Please do feel free to chat in your questions and comments. I may not get to them all during the webcast. With the virus situation, it's just kind of me handling questions in the back, so I may not get to them all, but I do review them after the webinar and try to answer as many as I can. And then I do show you again the VectorVest support numbers so that you can always call. And we do realize that support is really backed up. They've been hiring and training people, and still with the coronavirus, they're having trouble keeping the call waiting to what they consider to be a reasonable level. So you do need to be patient. And we want to promote the meetings and activities of our VectorVest user groups. And there's no physical meetings right now, but certainly some groups are using GoToWebinar or Zoom and having virtual meetings, and they're working out quite well. So do check the user group listings for those meetings. And then we want to provide a forum for VectorVest investors who do not live near a user group. So that's the purpose of our meetings. Yeah, Wayne says wait time is about an hour and a half. It was this last part of the week for sure. Part of that was the market. Part of it, of course, was just the demand on staff. Yeah, so if you can do other things and have the speaker phone going, that's probably the best way. I have heard from folks that the email response is not timely, so you need to hang in there. And I don't know if that's everywhere, but that's certainly in North America we're having those issues. Our agenda for today, we'll do our color guard review. Very excited about Dr. Barbara Starr's presentation, Surfing for Reversal Waves. She has shared with me what she plans to present, and it's absolutely fantastic. So she's just an exceptional teacher and a technical trader. He knows her technical aspects of trading so well, and I always enjoy her articles in the Stocks and Commodities magazine. And then if we have time at the end, we'll do an open house for your questions for sure. And I just wanted to let you know again about the Financial Freedom Summit. This is totally free. It's from May 18th to the 20th. So coming up not too far in the future, and I hope the registration link is working well. It's vectorvest.com/summit. I'll click on it after Dr. Starr gets going, and I'll plug it into the chat box and make sure it's working for you. But just want to highlight here, that I am presenting on the first day. So if you have a chance to tune in, finding the very best stocks. And as always, I don't give just the basic presentation. I want to make sure I give you something that you can use right away. And that's what I have planned for you. And Mark Noble with Horizons ETF Management, always popular. And he's going to talk about ETF strategies for this current market condition. I know you're going to love that, and really all the presentations. If you like options, the third day is for you, or if you just want to learn more about options, that's where to go. John was saying everything was working earlier on this registration, so Wayne might have to try it again. All right. Let's get into the markets and just see what's happening globally. I don't know about you, but when I have a chance to review these color guards, to me it's very insightful to see what is happening around the world. There's no question that the US is our biggest market, and oftentimes what happens there kind of drives the other markets as well to a certain extent. But if all the markets are going in the same direction, that helps you and tells you something. So in Canada, we've improved from last meeting at our April forum. We've improved. We're down 13.17%. So all the markets have had a fairly good bounce off of that market low that came about March 23rd. So we've bounced off of that. You can see we've had a lot of green in the color guard, one red light and a lot of yellow showing that indecision. And we came close to getting a confirmed up call one day, and then we've reverted back, and we have our long-term trend is still down. You can see in the trend column, but we have had a lot of primary wave up signals, and we've had a lot of green light buy signals here as well, and that's true for most of our countries here, as you can see. Singapore probably is a little bit weaker than some of the others just in terms of a lack of green lights. But here you can see the US side still down 17% year to date, but they certainly have had an explosive rally off of that market bottom. And just losing a bit of momentum the last couple of days here, and we actually got a red light in the relative timing section. But overall, primary wave is up, long-term trend is down, and in both Canada, US, VectorVest advocates caution when buying stocks, and you can see the needle is straight up into the yellow. So it's just like a traffic light on the market. And actually, 1, 2, 3, 4, 5 of the countries have the needle straight up into the yellow. So here's Australia, and a couple of green lights here, and so they didn't have the Thursday pullback that we got in North America, but still it's a fairly weak market. You can see the buy sell ratio just 0.12. That's actually the lowest buy sell ratio, the number of buys compared to the number of sells, and it's just telling you that even though they've been rallying, the rally hasn't been very wide or broad in terms of the overall market. Just kind of looking over at the questions here a little bit. Yep, the session is being recorded, and it is also on YouTube, everyone. And so, you know, I try to get the recording and the slides out as early as I can to everyone after the webinar. Usually it's late Saturday or early Sunday, but if you go to YouTube, that YouTube channel, and I'll type it into the chat box, the recording is available fairly quickly after that. So, Steve, you wouldn't be able to construct this table. I have a subscription through my seminar instruction account to Australia, UK, Singapore, Europe, and Hong Kong. So you wouldn't be able to do this. If you're in the US, you have the US software. If you're in one of these other countries, you have your country plus the US. All right. So the UK, interesting that they got a confirmed up call here. You know, the MTI had gotten above 1, and they were up week over week for 2 consecutive weeks. And they did get a confirmed up call. They were up day over day. So, you know, even a little more bullish in the early part of this, but still down minus 17 year to date. And the caution light is on. Singapore, they had Labor Day on Friday, I think there and elsewhere, and so we're up to the 30th here of April. But we have one green light on the Thursday, so that was the good news there. They were in a confirmed up call, and they've pulled back again to a confirmed down. But the primary wave has just switched from the down to the up, so that's maybe some light at the end of the tunnel there as well. And then Europe, minus 16% year to date, so some green lights showing up, but mixed with the red, and also lots and lots of yellow, and VectorVest advocating caution. There's a theme here. It's advocating caution, caution, caution. And here's Hong Kong. Mildly bullish, some green lights here. I'm only updated until the Wednesday here, so you can see what's going on there. Primary wave is up and lots of confirmed down. Bruce is asking about that black star and what's the significance. That is our RT kicker combo layout, which uses moving averages on the RT, and when you see the black star, just know that those moving averages, we have the short term above the longer term, And so we have a momentum behind the move. So that's what that is all about. When it doesn't have the black star, it means we could get a green light, but it doesn't have sort of that trend momentum. Great question. Yep, John, I'm going to show you the ETFs here in a minute. There's one for Singapore as well. And oh, and here they are. I forgot it was the next slide. Oh my gosh. Oh my gosh. All right. Yeah, I know it's 9 o'clock here my time, and I've been up a couple of hours, so I guess I haven't had enough coffee yet. But anyway, sorry. Here's the next one. So you can see the country ETFs not performing all that well. In fact, underperforming the overall market in many cases. But here's the NASDAQ. It's our only one in the green year to date. So this is the year to date. And in red are the VectorVest countries. And you can see Canada here is actually underperforming the overall Canadian market. It's down minus 20%. So these are just some selected ETFs that you can put in a watch list and keep track of them. You can see there are some countries that are starting to rebound here a little bit. Chile, and surprisingly to me at least anyway, Brazil. And the RT is moving up on these countries. So the RT, when you're analyzing ETFs, the relative timing is far and away the best indicator that I have found to know when to buy and when to sell. When the RT starts losing momentum again and falls below 1, you want to take your profits and get out. But it's a great signal to buy, and I find it's especially effective on ETFs where we don't have sort of the fundamental indicators. We just have the technical indicator of RT. Yeah, Bill out in Vancouver says Brazil is having a good year overall. So there you go. You know, let's see, where are they in the list here? Right, well, they are at the bottom overall, but minus 50, but this is a good start to get back. All right, so I mentioned my essay, and I talked a little bit about Training Tuesday, a help library for all things VectorVest, and I want to show you that. What I discovered when I did a webinar recently is that even some of our more experienced subscribers don't know where the archive for these help videos are. So I want to show you that. And so here, you know, for risk management, the Welcome tab gives you 3 interactive tutorials: how to build a watch list, how to read graphs, and how to heed the color guard. So valuable. And then now in the Welcome tab, we have our free personal coaching sessions. So now these are group sessions for now. Just due to the coronavirus, there's more demand on support, and more people need help more often. And so VectorVest is set up, instead of a free personal coaching session on the Welcome tab, you can click here, and for example, next week there's a session on May 4th and another one on May 6th. So just go to your Welcome tab, click on the session that you want to register for. Last week, Glenn Tompkins led the sessions. I don't know if he's doing them this week, but just outstanding. And so let me just take you quickly to, I'll go to Canada, doesn't matter which country you're in. So I'll go to the Welcome tab, and that's this button right here. Okay, and then I talk about the Training tab with our 5 quick start videos. Very important to refresh your minds about all of this, how to analyze your stocks. And this one here, the Weed Your Portfolio, is so critical when we see the market swings that we're seeing right now. It should be part of your trading plan, that when we get into a confirmed down call, we move into something like the weed your portfolio. You can tighten your stops, or you can come in and weed your portfolio according to the methodology designed by our founder, Dr. Bart DeLito. And then this is all about market timing, and then 2 strategies for cherry picking stocks. But I just wanted to show you over here the VectorVest archive. This is what a lot of people miss. They think if they miss the Tuesday training that Glenn Tompkins does, and he does such a great job of it, then you've missed it. But actually, every new webinar goes into the archive. And so he's been doing these since about 2016, I think, but we have quite an archive now. So he updates the archive every Tuesday. This is the entire list. So somebody was asking about how do I learn about the Unisearch tool? Well, here's 1, 2, 3 sessions that Glenn has done all about Unisearch, 2 on graphs, watch lists. And then if you would prefer to have sort of a time-stamped index, then just open up this detailed PDF agenda and you'll get a time-stamped index for every one of these videos, and you can go directly to the time of the topic that you want to see. Yeah, Pierre says Glenn's Training Tuesday is a gem. He's following it for the second time through, he says. VJ, the global countries that we have are the ones that I showed in that color guard. Yeah, Camille says your essay is great, so thank you for that. I love that. And he says, but subscribers, even experienced, should attend the Training Tuesday live. Every webinar, we learn new things. That's so true. And of course, we do our Q&A webinars on Tuesdays here, and we love having people attend that one as well. All right, so let me move that over again. Hopefully that was valuable to you. I just wanted to take that time after I kind of discovered that a lot of people didn't know about the archived Training Tuesday, but there it is right there. All right, so hopefully that's helpful to everyone, and then again, free group coaching. Let's move on here. Here's the market timing for Canada, just a little more detail. You know, with the anticipation of some businesses reopening and maybe the global economy getting that boost, the markets did end higher again this week. Our other key indicators, the RT and buy-sell ratio, also moved higher, but they're still showing indecision. They're still below 1, and this is fairly consistent across our countries. So the bulls and bears don't seem to be fighting it out, and we just need to heed the color guard. And it says don't be afraid to protect profits, and really that should be job number 1, to protect profits. We've had a really good run here from the DEW signal, from the green light buy signal, from the primary wave on March 25th, and you don't want to slip back and give too much of that back. We're still below where we were in February 21, when the trouble started for real. So here is the VectorVest composite, the market timing graph for Canada. You can see how the 65-day, you can see we came so close to getting above it, which would have given us a confirmed call, but the wisdom of this timing signal kept us from going all in, I guess, as we often do with our confirmed calls. And now we've pulled back, so you can kind of see we're kind of moving in waves here, and we've had a really nice run. But the MTI is hitting a lower high, so that's a bit of a concern. So, you know, we could have a bit of a retest, possibly even down as far as this area here, which would be a kind of a support level right now, or this support level. We'll see how far it goes, but you've got to be cautious. We have bumped up to 265 buys, which is, you know, certainly a lot better than it was, but still 0.32. 0.20 is our sort of bottom fishing level historically. Anything around that level and below, we're bottom fishing. We had 2 bullish strategies on Friday that led the Derby, but 3 bearish. Really a mixed problem here. Yeah, Tom says bull trap perhaps. Yeah, could be. You know, it could develop into a bull flag. We'll see. But it's certainly going to come down to, possibly come down to this earlier support level. Derek says, how did I get the long-term resistance line? Actually, what I did, Derek, if you follow Todd Schaefer's excellent timing the market. He went back 5 years. I went back 3 years with the support and resistance on my graph, and this is where it came in. So I just added the horizontal line uh, to the 5 year or to the 3 year graph, and then it just stayed here for the daily graph. Great question. All right, got to move along here a little bit. I wanted to show you the model portfolios in Canada, and there's a method to my madness here of showing you this. I think the model portfolios are doing very well. They haven't always done very well. There's been ups and downs, but currently the aggressive portfolio year to date is up 20.27%, and starting with a $100,000 portfolio on January 3rd, 2012, it's consistently made money. Not always, for every 6 month period or every 1 year period, but it's consistently made money, and currently it's up $240,000 from that $100,000 start. So it's been very, very steady that way. It's aggressive, so it's been more volatile than this one, model portfolio number 2, which is up 11.3% year to date and up $235,000 from the start point. And then model 3, which is really none of these portfolios, by the way, include dividends, unfortunately. Model portfolio number 3 is a dividend growth portfolio, so it's really your retirement portfolio, so not always getting the capital gain that we would like to see. This is my daughter Jaleesa's high CI investing search that goes with this, and dividend growth, high CI dividend growth. And so it requires a really strong dividend growth rate and payment. And it is down year to date because it goes to cash on the confirmed down, which was on February 28th, and adding no positions until the next confirmed up. And that's the same trading system for the conservative portfolio. And then the prudent portfolio is more aggressive. It uses the RT kicker combo timing system. So it's already in some new positions, and it's up 6% year to date. Yeah, well, Amin is asking, are there drawdown numbers? If you do the portfolio report, you'll get a max drawdown for the entire duration, about 8 years here. But more meaningful, I think, is the year to date. That's your drawdown right there, 10% and 7 or almost 8%. That's your drawdown. And model portfolio 2 was down 8% before it recovered by adding positions on the first green light. And just to show you that, before I do, the reason I wanted to show you this is the importance of following your trading plan. Rule number 1, follow your trading plan. You might from time to time have to adjust your plan, but if it's been tested and back tested and forward tested, and it's made money for you over time, then stick with it and give it a chance. Follow VectorVest market timing signals. Never ignore a confirmed down call. It doesn't necessarily mean you sell everything in your portfolio, but you might tighten your stops. You might use the weed your portfolio technique. Just don't let a really nice gain turn into a major disaster by allowing 1 or 2 stocks to collapse your portfolio. And then protect your portfolio. This should be rule number 1, really. Well, rule number 1 is follow your trading plan, but really you have to protect your portfolio. Folks, earnings are coming in not as good as we would expect, and a lot of companies are even afraid to forecast their earnings right now. And Methanex in Canada, it just cut its dividend 90%. Had not cut its dividend since it introduced a dividend in 1992. So that kind of tells you the state of the market and where we are at. So protect your portfolio, and when your rule says sell, sell. Don't wait another day. Don't lower your trend line. Don't lower your stop. Actually, just follow your rule and sell. And then different rules for different accounts is okay. We saw, for example, with model portfolio number 2 conservative, it sells everything on the confirmed down call, but it starts buying again on the very next green light, and that's okay. And it's in that regard, it's almost a swing trading portfolio, but only when we're in a, when the market conditions or the market timing is correct. All right, so just wanted to give you that. And this is what I love about model portfolio number 2, which in Canada we have a lot of folks following it right to the letter and doing very well with it. Now 2018, that was brutal. This maximum drawdown here, Amin and everyone, that was probably 15% right there in 2015. So even as they were selling stocks, the losses were piling up, and there you go. But nice recovery in 2020 here, and it's at new highs. And you can see they bought these stocks on March 27th, one day after the green light. So it buys them at the next day's open. And they've already generated some really strong returns with a pretty good mix. 2 gold stocks, insurance, software, and the TMX group. Yeah, Paul says, do we need to manually check for changes every day, or is there a way to see the alerts? You can set up your alerts in the alerts section for sure. Paul says the earnings conclusion that we're still in the bull market is wrong. Well, we have a system for tracking earnings, and we're getting very close to identifying a bear market. But this bear market that we had globally came fast and furious overall, no question about it. So you got to follow the timing signals. The bull bear market signals in VectorVest are not market timing signals. It's just another piece of information. And if you looked at the market timing graph, Paul, you will have noticed that the earnings timing indicator was falling all the way down to right near that 1.0 level, very close to a bear market. So we have to use good judgment on that as well. But great comment. Thank you for that. It's useful. So rule number 5, if you've back tested and forward tested your plan, give it a chance to perform. I have to tell you right here, it was pretty tempting, and I certainly talked about it with my contacts at VectorVest. Should we revise or update the number 2 conservative? I didn't like this drawdown, and we all agreed that no, it's proven over time. There's been other drawdowns, and it's just a consistent performer over time. So we let it go. All right, I hope that was helpful. That was the period we were worried about. All right, and then on the U.S. side, again, economies around the world beginning to open, but still discouraging jobless claims. Huge jobless claims and weak economic data coming in, and lots of profit warnings. So we have to be cautious. The indicators lost significant ground in the final 2 sessions and closed well off the week highs. So there's lots of volatility and lots of uncertainty. And again, it's interesting, we don't use the 65-day moving average on the US market timing graph or any moving average, but it's interesting that the 65-day seems to work extremely well for a broad market index, just as it does in Canada and our other countries. And it came up as resistance right here. This is that long-term resistance on the US side. When I looked at this over 3 years, this is where we found it. So pretty close to where we started to pull back. And just as in Canada and our other countries, we've pulled back below this trend line. So now we see if we'll catch support at this next level, or if we have to come all the way down to here. But if we do, we'll get another rally, and our buy-sell ratio and the MTI will signal when that is. The weakness in the buy-sell ratio, 0.25, is very telling. It's the canary in the coal mine, and we're still in a very weak market. So you need to take your profits when you get them, other than if you're a long-term dividend investor and stocks you've held for 5, 10, 15, 20 years are still performing well and holding up and giving you nice dividends. That's a different situation than if you bought a stock within the last year and try to hold through some of this misery. Tom says portfolio 2 goes to cash and a confirmed down. Why are there their positions at the moment, Tom? It's because it starts buying again on the green light buyer signal. So we go to cash on the confirm down, and the very first green light buy signal that comes after, we start to buy stocks. Okay, we start restocking. It replenishes. It's an interesting philosophy. We did a lot of study on this. Me and Todd, Todd Schaefer, our research manager, we did a lot of study on this, and portfolios that do a refresh um, every so often actually, start doing better because they get new fresh stocks in that are on the upswing, and that's kind of what's been happening with that strategy. It uses the pale blue chips divided or sorted by relative safety, and it's a great search. But every once in a while, you got to refresh it, and that's what the green light buy trading system does. She didn't put together the one for the US, but I think it's copied after that one. So I think, Ron, that'll work well for you for sure. All right. And then just quickly, I've mentioned at the last forum that we should ask ourselves every week, where in the emotional cycle are we? What is the risk? How long have we been in the current trend? And just a reminder, the longer a trend continues, the greater the chance it's going to end. So where do you think we are when we look over here? This is Canada, this is the US, tracking 8,000 stocks, and this is the Canadian market timing. But where do you think we are in terms of the emotional market cycle? Any ideas about that? Yeah, Boo Plum, contra ETFs are a great way to hedge and protect. Bill says we're still in the anxiety area. Kamel says we're in the blast off area. Only two ideas on it? All right, well, let me just, yeah. Randy, we're always looking here at, sort of these are the phases, and they're short-term transition. They're phases of the market. So we're looking what market phase are we in? So a little bit of optimism, Richard says, and Michael agrees, optimism. And Tom says blast off still to come. So listen, let me put this on here. End the suspense. So we're just currently right here. We're sort of still in that blast off phase. We didn't quite get to optimism in either one of these markets. That's the next phase. But we are in the blast off phase or getting close to it here. We were in it already. We had the blast off on March 24th, right? That's when the blast off really started to come. We went up very strongly. Now we're kind of slowing down the momentum, but we're still in this area here, and both Canada and the US. So rational investors, this is where, a lot of investors miss out because they may not feel prepared or ready to come in when the market has been beaten down so strongly. And depending on your trading plan and your goals, as we did with the green light buyer and the conservative portfolio, that was a good time to come in with some stocks, to step in. And then up here, when the market gets toppy, more disciplined investors are going to stop buying and manage the positions that they own. Canada, that happens at around 1.3 on the MTI, and the US, it happens around 1.6. And I think Canada is similar to the other countries. And then we get into this level where emotional investors, they don't follow their plan, their rules, and so they don't sell up here. They get anxious and then they panic, but they still may not be selling, and then they get down to the bottom, and that's when they can't take it anymore and they sell. So that's the worst. All right, so I think it's useful to review that always. And finally, for me, before I turn it over to Dr. Starr, um, just to let you know that we still have our VectorVest user group meetings. Check the user group listings, and if you don't have a group in your area and we want to get one going in the fall, give Kathleen, our VectorVest user group coordinator, an email at usergroups@vectorvest.com. All right, we may have time for more questions at the end. Richard was asking about those numbers. So this is the MTI numbers. We're at 0.85 in Canada right here, and we're at 0.80 in the US. Right down there, Richard. Okay, sorry I didn't mention that. Yeah, Dale, Regina, I know is going remotely. Lethbridge is doing remote meetings. I think there are others, Kelowna and others in Canada. I'm not sure about other countries, but there's some going on, and they are using the Zoom or the GoToWebinar. All right. So we'll have to get to questions. I do want to get to Dr. Starr's wonderful presentation, surfing the reversal waves. And I've mentioned already that Dr. Starr is a wonderful friend to VectorVest and has graced us with 5 presentations already to our international online forums, and always so popular. And I can see the room is absolutely packed here. So so I'm just going to turn it over to Barbara right now and let her show her screen and give her presentation. I'll just make sure she can hear me okay. Barbara, are you there? Barbara, are you with us? Hello?
I am here. Can you hear me?
Yes, now I've got you. Thank
Yes,
you
I
again.
am.
Thank you, Barbara, for joining us. It's such a pleasure to have you with
Uh-oh.
us.
Yeah.
All
Oh,
right.
thank you. You worried me.
No, it's all good. I am going to make you the presenter right now.
Well, thank you for the nice introduction. I appreciate it. Can you see my slide?
I'm switching over to you now. I think you'll have to accept responsibility for showing your slides.
All right.
And there you are. Okay, yep. And then now it's full screen, so you're all set, and I'll just turn it over to you. And we're all looking forward
I
very
did.
much to your presentation. Thank you, Barbara.
Let me know, Stan, if we have some kind.
Barbara, I just
All
lost
right.
your
Thank
sound.
you. Please let me know if there's lag time because the computers have been acting very weird.
There will be a bit
Oh
of
my
lag.
goodness.
There may be a bit of lag on the
Stan,
YouTube.
I have my sound on.
Yeah, I can hear you. You are kind of fading in and out now, but I can hear you when you were speaking
All
directly.
right. You can hear me. Good. Can other people, is this okay for the, all right, let me try this. Is this doing any better?
I can hear you quite fine, and people can hear you quite fine.
Stan?
Yeah,
Oh
Barbara,
dear.
I'm letting you know that I can hear you. You may not have your speaker on.
All right. Okay, let's get started then.
Yep, let's get going.
Thank you. I do have I have everything on. And I'm hearing you fine.
Oh, well then we're good. Yep, you're ready to go.
I,
The
all
slide
right,
is
fine.
not full screen at the moment, but
This is called Hello to everybody from California. I am, all right, very fine. It is full screen on my side. I don't know quite how to do that otherwise, Stan.
it looks fine. It's got the bars on the sides, but it's all good.
Is there something else that I can
Just that
see your
square
screen?
up
People
as
can see your screen. Click to stop screen share.
if you want. Oh, you know what? It's all good. It was me. You're all good. Video is good.
Okay.
Everything is good.
I have, Stan,
Uh, it's all up to you,
let's start
Barbara.
all over again.
Yeah, you
Hello,
got.
folks. This is Barbara Starr from Los Angeles. And I want to thank you so much for joining us today. I know this has been an incredibly difficult time for everybody all over the world. And it was like, it is interesting times we live in, but I certainly hope that you all are doing, you and your families are doing, are safe and well and avoiding this coronavirus. We're going to be talking about surfing the reversal waves. But before we do, I'd like to present with you a disclaimer that neither VectorVest nor I are licensed to offer specific investment advice. You need to be aware that risks are involved in stock investing, and everything you see and hear today is provided for educational purposes only and not investment advice. For those of you who don't know me, I'm a part-time trader and contributing writer to the magazine Technical Analysis of Stocks and Commodities. As Dan mentioned earlier, I did write the article that was the basis for the VectorVest Starr search. I did not create the search itself. That was actually done by people at VectorVest. But I'm glad that they did it because it seemed to have been something that was useful for a lot of people. I led a Metastock user group for a number of years, and for several years I was also vice president of the Market Analysts of Southern California. It was a group that was originally started by by Bollinger. I'm blocking on his first name, and some of his colleagues. Currently, I provide individual instruction and consultation in technical analysis. And if you have any questions, you can see my contact email address at the bottom of that slide. I assure you that I am not a surfer, so today's surfing reversal waves has nothing to do with my surfing ability, which is nil. It also has nothing to do with Elliott waves. What it does have to do is with price movement and the wave-like structure that I see when I look at prices. And you can see them as they follow going up, the rising and the declining, the rising, the declining, the rising motion of stocks and stock prices. Today, my goal for you is to demonstrate a method that combines 3 indicators to indicate topping and bottoming price wave reversals. You can use any chart with this method, but it's best with charts that stocks that have some directional bias, so we can identify those profitable reversals more clearly than we could in sideways or flat market conditions that have narrow price range. The stock that I'm going to demonstrate this with right now is called Premium Brands. It's a Canadian stock. And there are only 4 steps that you follow with this method. So I'm going to show you this setup. The first one is a simple 5-period moving average. And we're using this for short-term direction so that we can actually see what the short-term directions are on the market and as they move from highs to lows and lows to highs. The second step is that we're going to modify the style of that moving average and change it from a solid line to a dashed line and add a circle so that it gives you a very different look. Here is the look that it gives you with that modified 5 simple moving average. And the reason I like it is because it very much more clarifies, at least for me, what these movements are as they go up and down. They stop, they give you, some waves are longer than others, and some waves, sometimes you'll see the waves are going to be hitting the shoreline and just going sideways for a while before they start to rise again. The next step is to add a stochastic. What I use is an 8 and 3. You may use some other stochastic parameter if you'd like. There's nothing sacred about the one that I use. It just, for me, it kind of seems to hit the highs and lows a little bit better as things are moving. And I'm using this as a momentum indicator, partly just to make sure that, or to give us an idea of whether we are rising? And if we are, have we reached extremes as we might have here on the left-hand side of the screen? Or have we gone to lower extremes as we have after this tremendous fall that we recently had, the decline in the market? And whether or not we can see, perhaps if we're lucky, maybe we will get some reversals on the basis of divergences, either from the bearish divergences or bullish divergences. The last step is to add a 1 standard deviation Bollinger Band. This is something that I'm using not for volatility so much, but for helping us with entries and exits on these stocks. And basically, we're looking for stocks prices that have been above the band and move into the band and continue lower, as well as have been below the band, move into the lower band, above the lower band, and continue its movement to the upside. The entries for this are, first of all, set your chart for 3 months, please. Otherwise, it's for clarity, for the purposes of clarity. Otherwise, it gets very cluttered. We're going to be looking for price, as I mentioned, that had been below the lower 1 standard deviation Bollinger Band. And for reversals to the upside, we're going to look for price above the 5-period simple moving average as an alert, and then a close above the lower 1 standard deviation Bollinger Band. The downside reversal entries, again, we'll keep the chart at 3 months. Remember that price has been above the 1 standard deviation Bollinger Band. And for reversals to the downside, we're going to look for price below the 5 simple moving average and a close below the upper 1 standard deviation Bollinger Band. To think about exits or taking profit, we would look at whether or not our initial stop loss was hit, or our price hits the opposite reversal entry band, or price hits the target zone that we may have set up, maybe a gap or something that was going to be filled, or an old top or bottom that was being retested. Here's what that chart would look like as we're going to be seeing it, and we will be setting this up in real time in the VectorVest program following these slides. So we were looking for price to have been rising, moving into going below the upper band. And in this case, we got lucky with the stochastic. The stochastic was at its extremes, and it also showed the divergence, the bearish divergence. Our stop would be above the top of the highs, a little above the highs that were made. And our first target would have been well hit as we went down to below that that lower Bollinger Band, the opposite Bollinger Band. And then as it moved a little bit, it kind of nicked a little bit. The lower band might have been putting you on alert for something that was going to rise. However, it was no follow through on it, and it continued to the downside. And it wasn't until about, I don't know, almost a month later that we saw prices actually rise again from below the lower band into above the lower band. And from there, did a little pullback, moved up, but never took out our initial low here at the bottom. And then again, it reached its first target and continued, in this case, to move ahead. We also had a little heads up here on a bullish divergence. Here's another example. It's a US stock. This is BristolMyers Squib. And it was a little more, it's a little more movement to it, but it gives you the same kind of pattern. It's moved below the upper band, hit the lower band, moved above the lower band, hit the upper band, turned around, came down. Again, it made this move up here to a little nick that the lower band, but again, no follow through. Continued on down. In this case, we didn't have much by way of momentum. The stochastic showing us the any kind of a divergence, except perhaps down here where we had this low, and then as we made a lower low in price, this was slightly higher. But we did have a move inside that lower band, and we were up and running from there. We are now showing some kind of a momentum slowing down and a potential for a pullback. This was done about the middle of April. Now, while all the stocks were going down, Regeneron, which is a pharmaceutical company, they were having a wonderful, wonderful rally. This wave was absolutely incredible, and it never came back into this band to make a close below the upper band until all the way up here back in towards the middle of March. It was a really phenomenal run, and that was because they had some fundamental news about how well their drug they were running some class 2 and class 3 drug trials, and so that was the impetus for that move. As you can see, it did move back down, gave us actually another reversal signal over here as it closed a little bit below here and certainly here in March, but gave us our next entry level to the upside as it entered above that lower band, close towards the last week in March. Sun Life Financial was not nearly as lucky, and here you can see again that move into from above the band into the band, hit the lower band, moved down, never once tried to get back inside the lower band until somewhere after March 24th, and had been going sideways, which is why I like these little dots. They help us to see what that was doing, and now hit that upper target, which would have been a good place to take an exit, because actually it started to go below the band again and has given us a down move. And again, this was approximately around, at the time, it was about the middle of April. Now, there are some price variations because the charts that I've shown you are they kind of illustrate those ideal reversals. And not all entries and exit reversals are as clean or clear. In fact, most of them won't be. But there are two types of pattern variations that appear regularly that you can be on the lookout for. The first one is the nominal new high or low. We have price that's trending, it's either up or down, and it makes a reversal. Gives you a valid entry, and price does make a small retracement, may even take it to the opposite band. But then price makes a new high, starts moving up or low for the move, but it doesn't make much of a new high or low. And that's why it's called a nominal new high or low before making what is really the larger reversal. And that can cause the original stop loss to be hit. So here's an example on Algonquin Power. I think that also trades in the US as well as Canada, I'm not sure. But this is where it had made, it was above the band, it went into the band, upper band, it closed below that. We had a close that took it down below the lower band, turned around, had a very valid entry, moved up, looked like it was going to continue this beautiful uptrend. And instead, what it did was it made a little bit higher high than had been here before. If you'd had your high up here and your stop loss up here, you'd have gotten hit. And then it said, okay, thank you, and took your money, and before it started to go down again. Did you notice that we did have a movement into the lower band? However, it did not close to the upside. It really closed to the downside and took it again outside of the band. This was around somewhere between the week of 317 and 325, March 25. And then it continued down, made this large low, and before it turned around and now made a movement into that upper band. And this is where you would have exited that trade if you had been to the downside. Now we have nominal new lows, but we haven't had any that I saw very much of during this last decline, because we rarely have 30% declines. So I had to go back in time a little bit. This is from the summer. This is August, then September, and a little bit into October of 2019. And we saw that when Anthem came down, was below the band, made a push into the band, that was your alert that we could be going up higher, again turned around and made a little bit lower low. In fact, this was like 3 points lower than the prior low. We had to then move back up. Oh, we thought maybe this one will move. No, it just went up towards the upper band. It was just a counter trend rally. Turned around, came back down again, did a continuation move down. And the lows that it made over here were just like 1 point lower than what had happened over in early October or late September, and essentially formed a double bottom. However, we did see on both of those occasions the momentum indicator telling us we had some bullish divergence. So it puts us on the alert to be looking for something that might be moving higher, which ultimately, fortunately, it did. Now that next variation is a retracement. And that happens during either an uptrend or a downtrend when price is tracing inside the bands. And very often you'll see it as an initial pullback that is a retest of the top or bottom. But it can also occur in the middle of a price trend. So I want to show you what those can look like. Here's one on a gold ETF. The T stands for top, and we had seen that price had gone up, had made it this nice top, had fallen. This was a valid entry to the downside. Price moved around. It made another valid entry to the upside. This one, however, stopped short of the top, retested that top, turned around, and came back down. Retests of the tops and bottoms are usually done fairly soon after that first pullback, a little retracement up when we're not quite sure, has trend actually changed or not? And this is the time when we know that price could actually go considerably higher, or it could turn around and go back. And we have to be on the alert for both of those. Price did continue to the downside, did make a bottom in about the middle of March, pulled up, and then did a retracement back. It had a valid entry, but soon after that, pulled back, retraced. This is a retest of the bottom. And then it moved up and had another pullback. And before it started to move up again. And I wanted to point out to you that this was a low, this was a high. The retracement was a higher low. Then it moved up and made a higher high, made another pullback. That retracement was a higher low. So we have what is essentially the beginnings of a new trend, which is in fact what it looks like it was doing, and has already come up here and retested those tops again. The next variation is a really interesting one, because you don't know that when's the middle. You have no idea when the middle is. But certainly this moved too far down in order to create a valid retest of a top. because it didn't go up high enough. And then it turned around, made a continuation move to the downside. So we had people getting out of the decline, trying to get out of it, and then price was too strong. The whole market was too strong and pulled it to the downside and made another low before it re-entered the lower band and made what has been a valid re-entry. And it almost touched the lower bands, I mean the upper bands at this point. What's nice about this midpoint or this mid-trend pullback, now that you can see how far the distance was from this high down to the first low before it did its retracement, you can then start trying to plan and see whether or not the next move down is going to be about the same length as the first move down. And it was fairly similar to that first move. We also had, at the time of the bottom, not only did we have long tails on the candlesticks, but we also had bullish reversals, signs that were helping us to determine that this could be a rally. We didn't know how high up it would be, but it might be something. But at least you were saying get out of the downtrend and possibly, if you're interested, enter in that uptrend. Now, I've created some unit searches that for both Canada and the U.S. And when we go into the live charts, we'll go in and show you exactly how to set up not only the setting, but also to set up these unit searches. And I just wanted you to give us a sense of what we were looking at. For the Canadian up move, for the SERPs up, we're looking for a value above of 1. We want price to also have an average volume of 50,000 shares. We're looking for the Bollinger Bands to have crossed above the lower 1 standard deviation band in the last 2 days. And we want the stock to be trending higher for a day. And we're sorting by relative safety divided by relative timing. For falling stocks, which for people who are interested in options, falling stocks can be prices tend to fall faster than they rise, as you know. So, this can be a very good vehicle also for search for looking for stocks that might be worthy of putting options on if in fact you don't want to trade the stock or short the stock itself. So again, we have a little bit higher values to give room for the stock to move down if it's falling. Same average volume. We want price to have crossed below the upper band in the last 3 days. We want to know that it has been trending lower for a day. And we're going to omit the ETFs. SERPs up in the US is different. We're going to start with a little higher, not $1, but we will stay at least a $5 stock. And our volume is going to be a lot higher, 250,000 shares on average. And price will have been crossing above the lower band the last 2 days. The relative timing on this is going to be trending higher for a day. And on this one, we're going to omit the ETFs here on the upside. For the stocks falling in the US, we're going to have a higher value, a $10 value, so that there was room for it to move to the downside and decline during the fall. Same 250,000 shares minimum for the average volume. Bollinger Band will have crossed below that upper band in the last 1 day, and the relative timing would be trending lower for one day. Okay, now that we've gone through the process, we will go through and do it in real time and go surfing in VectorVest as we walk through that process with live charts. If I can get to the VectorVest program and the Canadian stock. And what we're going to do this on is Shopify. I'm going to stop for a second here. Stan, do we have any questions? I'm just talking out into the universe here. I have no idea if anybody's hearing me or following me or
Hi,
is confused.
hi, Barb. There are lots of questions coming in, and people are loving it. Lots of comments. This is excellent, and this is really good, and I knew they would.
Oh, you did you? Thank you so much. He's my biggest fan club member. I can tell you, it's wonderful. Thank you so much, Stan.
A lot of people did ask about the Bollinger Bands, and we're going to show it here, so you'll get the settings for that. Stochastics,
Absolutely.
you are using a different stochastic setting or not?
I'm using an 8 and 3.
8
That's the
3,
one I
okay,
like.
slow. Okay.
But you don't have to. You can use whatever one you like. It could be there. It could be the default of this, which is usually like 14. You can use something faster or slower. But it's, I just want you to get a sense of what this is like. That's all.
Okay. And they are the slow stochastics. Tom is just asking.
They are.
Alessandra says, told ya. She asked me in the chat box and I got it wrong. Oh, that's so good.
All right.
And Kamel was just asking, and I think I know the answer, but I'll just ask you. There are some fast entry and quick reversals. No matter how you set up your system, there's going to be some false signals, etc. So his question was, would market timing help avoid some of those or benefit in any way?
That is an excellent question. Um, we can't avoid everything. The market timing, it may or may not correspond with the way that the movement of price and the way that it turns. So I'm not quite sure if we can really eliminate a lot. One of the things that we can do, however, and Stan did this, and we'll go over it, and Stan will explain it to you what he decided to do. I used I first let me go into that question a little bit later, because I do have some methods that you can use to make this a determination of, is this kind of something that's false, or is this something that we should follow. So maybe that will answer your question a little later, and then I want to go into the Unisearch a little more, so that you have a clear understanding of how to do these things. But first, let's do the.
Yeah, Barbara, I was just going to say, people are asking about the setup, so I think now is a good time to go in and show what you were planning to show.
Absolutely. This is what I'm planning to show. We'll use it on Shopify. I'm going to set things up the way that I have them. The first thing that I do is I have, as you can see here, a 5 moving average. I'm going to change the style on the 5 moving average. I'm going to change the color to something that I find a little more pleasing to look at. I am going to make this a little bit thicker, I think, just for our purposes here. I'm going to make this not solid, but I'm going to make it dashed. Then we're going to use a line marker, which isn't often used in this program, but I think it can be very helpful in following how things go. It's a circle. And I'll make it medium. You may not want to make it medium on your charts. I'm going to make it medium just so that you can see it more clearly. And we'll say OK to that. The next thing that we're going to do is have a stochastic. And the stochastic colors that I'm going to use, I wish they had maintained this. Well, as a matter of fact, I'll show you what they are, because I set this up as a graph layout. We're going to change I use a slow 8 and 3. But you can use, as I say, anything that you want. I'm going to change the style. And so this is going to correspond to that same color that we're using for the moving average. And we're going to use the, let's see, I'll use a gray so that it's light color. And say OK to these things. It will not change, as you know, probably, unless you first of all click off the stochastic and click it back on again, and then you'll get your color changes. And then I'm going to put on a Bollinger Band, and I'm going to again change colors on this. And I just wanted the first one to be white, the top band, and the second band I also want to be white. Sure I do. And we have the setup, and you know, I'm not happy with the way that looks too thick to me, that line. I'm going to go back here for a second and just change this style and make this not a thick line. I'm going to make that the normal line. And I think that'll be, yeah.
And Barbara,
okay.
Barbara, would you mind just to go into the Bollinger Band settings, because the default is 10 and 2, and people will need to know how to change that that setting to 20 and 1.
Sure. I will change the settings. You're just going to click on the Bollinger Band. You are going to, it comes up with a normal period of what you said 10, is that what it comes up with?
10 and 2 is the normal, the default.
Okay. Yeah. It's not John Bollinger's normal, but it is apparently in, John Bollinger uses a 20 and a 2 and 2 standard deviations, and he uses they're simple moving averages, not exponential. So I leave it at 20. I had tried a 10. I didn't like what I was getting. It was too many false signals. So, and then the standard deviations, instead of it being 2, it's being 1. And then we say okay to that, and then change whatever. You right click on it to get the style to change the colors as I change them. Does that answer that question? It
does. Thank you.
Okay, fine. So that's basically how we set this up. And again, I set this to a 3-month setting. Now, people who have seen my presentations before, you know that I am very big on doing support and resistance levels. So before I do anything on a chart, I'm always looking for where's prior support and resistance. The problem is if you do it after you put these on, it's really kind of hard to tell where anything is. And so I would have had, I would be putting my lines up here and over here, and I just did not want to clutter the page up for you that much. I just wanted you to see this very simple setup. Probably some of you have already done something very similar to this. And I wanted you to see the reason I use the 8. Can you see how closely it comes in to where where things actually, do make the turnarounds at the bottoms and at the tops? That's the reason I lowered it to an 8. But you don't have to use that setting. It doesn't really matter. All right. So what I had done is, and we're going to the unit search now, unless there's another question about this.
Well, Bill.
Stan, any other questions?
Oh, sorry, got to turn on my mic here. Bill A was asking, how are the stochastics used for your entries and exits? You've shown the layout there.
That's a good question, and it's not used for entries and exit. The entry and exit has to do with price within the band, closing below the upper band, or closing above the lower band. And sometimes these bands are very narrow, so the amount of that you're talking about could be very low. It won't be on something like Shopify, because that's a very expensive stock, but it would be on some other things. You have to make a decision whether or not it's worth running after. And remember, bands don't stay consistent. They are volatility bands, and so they're moving. And so what you're seeing here after the fact may not be where those bands are or were at the time you're looking at them for your target. So I use the stochastic oscillator only to help me to see whether things are bottoming out or are coming up and going towards extreme highs, or lows, because these also then follow that same kind of motion. And you can see that we've lost a lot of momentum here on the right-hand side in April, since even though stock is going up. And part of that has to do because people are taking some profit. There's been some profit taking up here. And you're seeing that the longer candles have become shorter candles. And so there's not that much momentum left. And then it's just been these very small candles that are just turning over. And you can see price has been, and this is as of the 1st of May. So this was as of yesterday. This is what was happening right now. You just had an entry signal for a potential to the downside. Is it going to be a nominal new high continuation? I really don't know. But all I know is if I had been in this trade, I start seeing small candles and dojis and candles coming into the into the up from the upper Bollinger Band into that channel, I would be looking at it and saying, "Oh my goodness, I'm going to tighten my stop. I'm going to take profit or partial profit." I don't know what's going to be happening once this actually takes place. There are a lot of people saying that we've hit a 618 retracement in the markets. Unless we take out the old the old highs, we may do nothing more than double top and then turn around and come back and retest bottoms again, or just go sideways. Nobody really knows what is going to be happening as far as the future of this market is going to be. It's been devastating on the economic side as well as on the health side. So my stochastic, to answer your question, is basically I don't look at the crossovers on the stochastic. Price is my leading indicator. Your stochastic is your follower. It just helps me to know whether or not momentum is in keeping with price movement. That's all I'm looking at. Not with price. It's not to verify price or confirm price. It's only to confirm the movement up or down or sideways of price. Okay, can we go into the Unisearch at this point?
Yes,
so
that would be great.
We can do that, and I'm gonna just do the surfs up thing. You can see what it was for the surfs down. I'm going to ask. I originally had used just the VectorVest as my sort. Okay, I just use a VST as my sort. And I don't use because I'm not really as familiar as other people are with the best ways to use some of the other VectorVest choices that you have as far as a sort goes. And Stan was kind enough to look at my slides, and he was wondering why I wasn't getting. He says this doesn't make any sense. So what he did was he experimented with a variety of different sorts. And that makes the whole difference. And that could be one of the things that helps you to stay out of something that is not going to be, that looks like it might meet the criteria, but it doesn't meet the criteria. So I found that this makes a big difference, the type of sort that you use. So be very careful as you're looking at this. You know that at the time of the search, I can't delete that parameter. Let me see if I can. We are looking for the stock, and we go into price, and we go to price split adjusted. We look and make sure that it is greater or equal than $1, and that's a custom value, so we put in $1. It wasn't it? It's not going to let me do it.
Yeah.
Okay.
It's
Thank you. Okay. we do a similar thing as we go into stocks. We go to price volume, and we go down and we find the average volume, 50-day volume, which is what's being used in this program. When we do the stock price again, we need ProTrader for this, by the way, because what we're going to do is use the ProTrader, which has a variety of of technical indicators. We're going to use the Bollinger Bands. And that price, the 20-day moving average is what we're taking it from, not the 10-day, the 20-day. And instead of it being the 2 standard deviation, we make it a 1 standard deviation. So we're looking at 1 standard deviation bands that have crossed either above or below. And in this case, it's above the lower band. You have choices here, the upper band or the lower band, and has done that in the past 2 days. And then we do stock, and we go into capital. I think it's capital appreciation here. Yes, for relative timing. And we click on that. And then we click on trending, and we want it to be trending higher for 1 day. Is that clear how we did that?
Just checking the chat box, and don't see any questions coming in.
Okay.
Lawrence had a question about the Pro Trader. Yes, the Bollinger Bands setup, Lawrence, you would need the Pro Trader. I contacted VectorVest, and they are providing the forum attendees and the YouTube attendees a 30-day trial to Pro Trader, and if you decide you like it and you're finding successful trades with this setup, then you can purchase it. It's a lifetime purchase for $100 saving, $395 US would be a lifetime purchase. If you have real time, then you have the Pro Trader. And there's something like about 30 different searches on technical studies that come with it. So it's a nice to have.
Thank you, Stan. And I'm just going to go through, and I'm setting this to March, was it 24th? I think it was. That was probably that time when stocks were starting to rally. And I'm going to run that search. And we have several stocks that come up. And let me see what happens. Now, one of the things that I did do is once I had my setup, I went into graph layout, and you can go the save or modify layout. So I saved this, and I saved this as Starr Surfing 2020. You can call it whatever you like. And that way it will always come up with the colors that you want in the way that you want it. So here we have a 3-month chart. We want to go over to the 25th, and you'll be able to see that. 24th is what we looked at. This is, I mean, it went into the bands and it just went mostly sideways, okay? But if you had your stop down here, you would never have gotten it hit. You would have hit your first target, which is the opposite band, and before it started to come back into the band. Now, the thing that we have here, let me move this over, is we have price coming back down, and it's inside the band. And you're looking at this and saying, okay, what if I exited? What if I didn't exit here? What if I went into this area here? What am I supposed to do now? Well, your choice, and this is your choice, and it's your risk management and the way that you feel that whether the stock is worth being in or not. Your choice to be able to say, let me see if it goes and hits the lower band. I'm not quite sure if it did. Here the low price was 164, and the lower band was 158. So the lower band was actually lower than that price. So price didn't hit it. And then you're going, uh-oh, now what? Did price hit it here? Low was 173. No. Price is still higher than the lower band. So, you have to make that decision for yourself whether or not that's worth staying in. If your stop hasn't gotten hit, so it's a question of your particular aggressiveness or conservativeness as to whether you want to take what you had or to hold on and see whether or not something goes up. I want to point out something about stochastics here, which is I've always found very fascinating and very telling. You notice that this is really sideways. And when price comes up, and when price is not making many, the higher is not making any big moves. It's just going essentially sideways. It's in the narrow range. It's not the kind of thing we want to be trading. But look at what happened to the stochastic. It's gone up into overbought areas. It's saying this is an extreme. And I'm saying that isn't right. That should not be an extreme. Go over to your left. Man, this is an extreme. Okay, this rose, this wasn't sideways, this rose, and this fell. This stayed at an extreme low. So you have to be able to determine that this is not in sync with what you're looking at as far as price goes. And so I would be extremely suspect of this until we get a very clear breakout of something that would be, let me see if I can put something in here, of something maybe up at this area. I would be looking for something like that as a breakout before I would get excited about, is this going to continue to the upside? So then what we do is we are going to get this full screen. Are you able to see the full screen?
Yes, we are seeing a 3 month graph full screen.
Good. And so we have another stock that has come down. We were looking for the 24th. What would we have gotten on that 24th? Would be about here. And again, price moved into above the lower band, stayed there, did not take out your lows. I don't think it did. Let me see. Come on, show me your price, please. Okay, that low was 81. This low is 92, so no, we haven't taken anything out yet. 87, nope. So we were below that. So if we were in it, we're in it. Not exciting, but we're in it. And eventually it did move up. And you see here, you're much more in sync with the stochastic indicator to tell you that there is some momentum behind it. When you see momentum coming up and your price is flat, somebody's getting out of that stock. There is just nothing there. Nobody is wanting to be in that at that moment. Usually, that's what it means for me when I look at it. So we are going to be having similar patterns all the way through, but they would have all been profitable patterns. I think you ran. Is this the one you ran, Stan? For on a quick test?
You know what? I was typing
Oh,
responses to
okay.
questions. I'm not sure which one you ran.
This is a
it was the
20. This was the
surfs.
one on the 24th. I didn't know which you.
Yeah,
I thought that.
the surfs up from the 24th. We were catching it. You know, the primary wave was absolutely the next day, so you'd be buying on the morning if you were, you would be stepping in on that day. So that was the quick test I also did 25, 26, 27, and they all delivered, really strong results, some better than others. But that was right from the bottom, Barbara. So I also did my own testing from more of just a pullback, and we had a pullback sort of April 4, April 5, April 6, and so on April 6, I wanted to see would this still have produced really strong results, and it absolutely did. It absolutely trumped the overall market, and the most important part that the quick tests are great, but the graph setups came out just perfect, so you could actually see, yep, this would be my entry, and I could either exit at the top of the Bollinger Band, or I could set my price target below another candle up there and let it run, let your winners run philosophy that VectorVest teaches. So you've got real nice choices that way, and so I wanted to check it from a real strong bottom, which we had on the 24th, 25th, 26th, 27th, and people can do their own testing. That's the best part about VectorVest. And then I also wanted to check it out from just a minor kind of a pullback, 4-day pullback, April 6th. All strong results.
Fantastic, thank you. And what I just put in here was were lines that indicated where the gap had taken place. It had fallen, and look at what happened. Price came right up to that gap, the bottom of that, and we have to see whether whether momentum is going to be strong enough to carry it into and fill the gap. If it doesn't, chances are it will turn around and come back down and do another retest. So I just wanted you to see that you can combine various elements.
And Barbara, I noticed you put on the primary wave. Somebody was asking about how did we get the triangles on the graph? They are from the primary wave market timing. And just keep in mind, this is market timing. This is our fastest timing signal. It has nothing to do directly with the stock or ETF. It has everything to do with the market. It's the market timing signal. But you can put them on a graph and see how the stocks would have done at different market conditions.
And you know where to find them. They are down at the bottom. That's one place where you find them. And there's a little arrow, if you can see. Can you see what I'm doing here, Stan?
Yes, we can see the bottom there, the
okay, and we have all of the ones, whether it was a confirmed call, we can put that on. And the last confirmed call was here. Was a down market. We had a green arrow. I haven't seen one since. We had the primary wave. We can do the DEW. And here we have a down arrow here and an up arrow here. I was not able to find that if you used the arrows, that we would get an entry that was coordinated within a very short period of the signal, either a little before or a little after. So I did not use that as part of my search. Okay, as what I was doing. Here's your green light buyer, and here you have a whole lot of entries and potential places where you can get out if you wanted to. You can use the kicker or down here at the kicker combo. So there are a lot of places. If you missed something, that's one of the nice things about this. If you missed a move and you weren't sure, oh my goodness, I missed this. Did I miss my opportunity? You didn't miss an opportunity. You could also have gotten in here. But if you'll notice, it didn't come in at the day that we did. At the day that we did the search, which was on the 24th. Okay, so here was what's the yellow mean, Stan?
It's neutral. There's no green light in the price column on those days, so that's
okay.
Why you don't see the red.
Okay,
or
so,
red or
so we don't.
triangle.
So we don't have any buy signals. We don't have any sell signals. We just have something that is saying it may or may not be doing something, and this is so you have all of those options. The reason I put that in was for the primary wave was because in this case, the primary wave worked. Not all cases will it work, but as you notice, wasn't bad here at the top, wasn't bad here over here on the left. So, and one of the nice things, you see it change color on the screen so you can tell where it begins and ends. That's one of the nice features, I think, in this program.
Absolutely. And Barbara, just a couple of quick ones that came in. Tony had commented on that search result that a lot of petroleum stocks came up, and that is absolutely true. That was one of the industry groups and sectors that was really beaten down, and so there were a lot of reversals right at that point with petroleum. But in my own real trading, I would never buy a basket of 5, 6, 7 stocks in one industry group, and you may not either. So just be a bit more selective and diversify in there, I think is appropriate. And then again, Steve and everyone, those triangles having to do with the market timing. They were not the stock timing. So I don't want anybody buying on a green triangle thinking that that was a VectorVest buy signal. That's not the buy signal.
That's it. That's exactly right. Thank you. It is not. It has to do with the MTI. Here we had this is Canadian National Resources, and this is, or is this Railway? No, this is another petroleum stock. So it was another energy kind of thing. If we take a look, and this is something you're going to find true, particularly in the Canadian market, as you well know. If I just go to the viewers right now, you see gold and mining. You're not going to see anything else. I mean, that's it, folks. I mean, this is Shopify got to be the only thing that was not something that was related to the mining industry. So that's something that you have to, I think, be very, very careful about, particularly if you're trading only in the Canadian market. Let me take you over here to the U.S. market, and let me get over here to the Unisearch here. Now here's 324, and we also had some petroleum. We also had a lot of the energy stocks, but we did have some variation here with the Carnival cruise line, which I would never ever take based on what had happened on board there. You have the Carnival and Six Flags, and but mostly they're going to be the energy stocks, very, very similar to what you had. So that's what this search yielded. I don't know if you'd like to go over some of those stocks here. I'll just take you down to
there was some interest there, and we've got I would say about 20 more minutes, Barbara. So we've got some time here, and
okay.
Nobody's left the room.
Let me then explain something and answer the question that was asked earlier about what do you do when it's in the middle and you don't know what the heck is happening, and where you're having an entry that was here. You had an entry, for example, over here. Let me put a date line up here. That you could see that it came into the upper band, and you're saying, okay, is that the end of it? I'm going to show you something that I like to look at on Stochastic, and I hope the lines don't confuse you. I like to put a line at a 40 because I find 50 is a kind of a mark of where things come in. Or is this? Oh, I know. I probably. I think what I did. I know what I did. I turned this black because I was using a white. Okay. Let me do this.
Just while you're doing that, Barb, I'll just mention on Stochastics, a couple of people were asking. The light blue line is your short-term indicator.
It's the K.
And the white is your longer one, just so people are aware of that.
And I'm going to set this as a default color for right now. Okay, so what I like to do is set it at I like to see if it's above 50. So here's approximately 50, okay? And what I see coming down here, oh shoot, come on out of there. I don't want this. I want this. This is pulled in, and this pulled down to the 50 line. I need to see it go well before 40 or something before I am feeling comfortable that we really had a real important pullback. So that's one answer to part of the question. The other thing that I like to do, and let me move this to a 40, and we'll move another one to a 60. Approximately here. Okay, so one of the things that I think that's a little too high. One of this that I like to see is if we have something that is strong, and look over on the right hand side now. Here we're going down here around the middle of March. We're going from a stochastic low It goes into that 40 to 60 area and then does not follow through, and we have a pullback. And that pullback takes us right down again to a lower price on the stochastic, or lower level on the stochastic. Then we have a push up. And that push up occurs around here. We're already in the band. You've been in here. You haven't been taken out yet, I don't think. Let me see if we have a low. We have a low price over here of 380. And what's our lowest low over here? We have a low price of 386. So we haven't been taken out. We've got our stops are below here anyway. So we're still in this trade. And the question that you have is, since this is the initial move up and this is a little initial pullback, you keep your initial stops where they were. You do not change them. Okay, as far as I'm concerned, you keep your initial stops under here until you know that there's the movement in the direction that you really want. But we didn't have that movement. We had this pullback, and we had the stochastic taken all the way down here to a 5, for Pete's sake. So this is the this is something that you know, you're not sure what price is going to be doing at this point. It may just turn around and just go down to 0 for all you know. And when price starts moving back up again, then you have some confirmation as momentum is following price and following that direction. And we have taken out the 50 level, and we have taken out now, and once it gets above 50, I feel much more comfortable. And I like to see it stay above 50. And then when the pullbacks come, I like it to be between this range between 60 and 40. That's a way to know whether or not this pullback that was taking place here, this little pullback, was something that was really important for you. So maybe that helps to answer one of the questions that you had. Another thing that I would do sometimes is I'll go into a DPO, and I like a 13-period DPO on something. And I want to make sure, now the DPO 13, remember we're using a 5-period moving average, and that's a faster moving average. We're using a longer term here of 13. That's not even considered a long-term moving average, but it is at least keeping us out of some trouble. And so if you were very concerned about what's happening when price is in here and you don't know what's going to happen, you wait until you see something that confirms. And what we had here was a move up. We're now above the 50 line of the stochastic. We're above the 0, and we can see that on this pullback, we had a good pullback, and it didn't take the DPO below the 0 line. So those are two ways that I hope would answer some of that question of the confusion of what do you do when price is in this thing, you're not sure whether it's going to go up, go down, it hasn't touched the opposite band, what are you going to do now? So you have your initial stop, and that is always the most important thing. You have your stochastic, that's going to either get stuck and stop below that 60 line or 50 line, or you have a DPO if you want to use this DPO as something that keeps you into perhaps the trend. So that helps to minimize those false moves that somebody was asking about.
And Barbara, someone was just asking how we put the buy, sell, hold recommendations on the graph and whether those might match up in any way and be another valuable confirmation or trigger.
Well, one of the hold on a second here. I gotta get over here. Let's open this up. As far as the on the graph.
Just on the graph.
Oh, on the bottom thing. I can,
the,
you know what? I'm not. Let me see. Let me get this up. Maybe
I can see
there it is.
Oh, there you go.
Okay. Yes, it was. I couldn't find it for a second. You go to REC.
Oh yeah.
Click on REC. And this is still in a sell mode, but the reason that we got the buy in our technical indicators is because of the sort that that was done for the, for the Unisearch. That's a part of what was going on. And I wanted Stan to explain to you what that sort was and why we use the difference that a sort can make, because I use the regular VST as part of my sort. So maybe you can explain part of that, if you would, please, Stan.
Sure. People were asking mostly about the relative safety divided by RT sort that you see up at the top there. And since this was a reversal type of search, we wanted to find stocks that had been sort of beaten up a little bit and were ready to explode up from the bottom, but we didn't really want to throw safety out the window. So this sort, relative safety divided by RT, the relative safety ensures that you have at least fair fundamental strength with it, the financial consistency and performance over some times. They're still going to be beaten down a little bit, but then the relative timing is going to find stocks that have really been hit hard in price. And by putting the RT trending higher one day, it shows that they've kind of started to turn up. And what I noticed is that it worked extremely well with the graph layout that Barbara had designed. And so we used that combination of that sort and adding the relative timing. In US, a little higher price point, quite a bit larger volume. We don't have as many stocks that have 250,000 average volume shares, and that'll be true for our other global countries. So you could bring that down a little bit, but if you could look for higher price stocks as well. Your results would probably be less because it's sort of been the small caps and the mid caps that have really led the rally off of this bottom. But that was the purpose of it, to ensure some
Right.
relative safety, but just to find those beaten down stocks. And it's unfortunate that in the search, the top 10, most of them are coming in with the petroleum. I see Spin Master there, a leisure company, and Methanex, I guess, related a bit to the petroleum. But that was the beaten down industry group.
Okay, and this is about where we went in on that one.
Exactly.
On Spin Master.
And I just,
So
again,
Stan was the one who experimented with this because he knows the program so well, and I'm so glad that he did, because it makes it for a much better strategy to use, a much better search than I had, and I'm really thankful to that he took the time to go over and experiment with it. You'll notice that there are various that the searches are different, whether it's U.S. or on some of them, whether it's U.S. or Canada. So, but Stan was looking for certain kinds of things that he understood would happen at reversal points, and so and particularly for stocks that have been beaten down as much as were during this tremendous decline.
And once again, with the graphs, you can use this for your dividend paying stocks. You can actually use a dividend search and just add the Bollinger Band criteria to it as well. So you can certainly look for dividend stocks. And actually that relative safety divided by RT works well with, if you filter on a dividend watch list, such as the Master Retirement Watch List, or the major index, that sort of thing. So there's just so much flexibility with it. But at the end of the day, it's the graph setup that Barbara has developed that just makes it such a clear and easy to follow strategy.
Well, the graph setup does do that, but the search will find you the stocks that you want to be trading. So that's a whole different thing, and that's why I'm so glad that Stan took the time to experiment with it, because it made it a much better strategy to use with that search. Did anybody have any specific things? Do we have a couple of minutes? We can go over something, or
a couple of minutes, and let me just have a quick look. I did flag some things that maybe came in earlier. that we might not have gotten to. Let me just do a quick check. So Gord was asking about would the close above the lower Bollinger Band and exiting above the upper Bollinger Band, would that be an effective approach?
A lot of people who trade Bollinger Bands, regular Bollinger Bands, always use the bands. They want to go from lower to higher. Okay, they want to go from over here when it hits the low band, it to go up and hit the upper band. This is one of the common ways that people use it. So that's the reason why I suggested that if it reaches the upper band, that might be a point at which you want to take a profit if you'd like to, or to exit the trade if it's working in your direction. So, but at least it gives you a point of reference, and I think that's important. But also remember, Bollinger Bands are volatility bands, and they are not going to be the same when you see them after the fact. So something may or may not reach the band at the time it looks like when you're actually in the trade.
All right. Well, Barbara, what I'm going to do, I'm going to take back control of the slides. I wanted to make sure people got
Well, let me get back to my PowerPoint thing here again.
Okay. Yeah, just to make sure we finish up. Oh gosh, yes, we got to finish it up properly here.
If I can find my PowerPoint, we walked through this. We've answered some of these questions, and then do we have any other questions?
Somebody was asking, is the search in the US database? The searches are in the slides, Michael, and you will have to create the searches. So you can create them for the US database. The US setups are in the slides. The other question was, will we get the copy of the handouts or the slides? Yes, they will be available. I probably will have them to you um, later tonight or tomorrow. And as far as the recording, you can go to YouTube right now. I put the YouTube channel in the chat box. The Pro Trader special, a 30-day trial, so that you can run these searches and test them out for yourself. I put that in the chat box as well, so you can just click on it. The summit, I put in the chat box. People were having trouble registering for the summit. I put in the summit link in the chat box. So if you go to the chat box, you'll see those 3 links and just click on them, open them up, and then you can carry on and go from there. So, and Jeff says,
Okay.
says, Dr. Starr, you look like a pro on the surfboard. Thank you again thank you again for a great presentation. I didn't know that was a self-portrait.
That's great. Yes, it was me. It was me when I was considerably younger. No, it was not me, please.
And Jim, the slides give you the incomplete agenda and also the registration. Gives you the complete agenda for the summit as well. All right.
Okay, I think we're just about out of time, I think, aren't
Yes,
we, Stan?
we
So
are.
I
So
want to,
thank you so much again, Barbara.
yes, and thank you, and I wish you good health, plus some safe and profitable surfing. Are you seeing my surfer guy there?
Absolutely, he's wonderful.
I want you to know that wasn't me either. So
Okay. I'm going to take back the keyboard now. So thank you again, Barbara. I really appreciate
okay.
it. I know you put so much
Thank
time
you.
and
If you
energy into all your presentations, and they're so creative and practical. So thank you.
if you need me for Tuesday, just let me know,
Oh, that
okay?
was the other part I meant to mention. My Tuesday Q&A, I'll put the link to register in the email that I send. And Dr. Starr has kindly agreed to join us for all or part of Tuesday, and we'll make sure if she's there, we'll be looking at some charts and answering your questions. So if you can join us Tuesday or register and get the recording, that would be fantastic. All right, so let me just quickly grab the screen. Okay. Did I grab the screen? I don't know. I've got to have a look here, I guess. Nope, I didn't get the screen yet.
I don't have any control at this
Now
end.
I did. Yep, I've got it. All right. Thank you again, Barbara. I'm going to
My
just
pleasure. Thank
just
you.
finish up here a little bit, and we're all good. Uh, okay, I am on my slides. There we go. So somebody asked about the agenda, and it is in the slides. You can see it here. VectorVest.com/summit works beautifully on that. Oh, and lots of thank yous coming in for Dr. Starr. So pretty fantastic presentation. We were so blessed to have people like Barbara who are willing to give us their time and creativity and actual experience and training. It's so wonderful. So thank you again. But here's the link on that. And again, I'm speaking right at the start on the first day. So look forward to seeing you on that. And then there's that special offer. It's in your chat box, the link. You can just click on it, vectorvest.com/forum PT. So if you do take a trial, make sure you diarize the end date of your trial and make a decision. You know, have I made money? Have I gotten value from the pro trader? I'm pretty sure you will, but it's always individual. Um, but you will save $100 if you just decide to keep it. There's 38 pre-built searches. And for those of you that are new, and I know we've got a lot of new folks on YouTube and I think quite a few here in the room as well, we'd love to have you join VectorVest, become part of our community wherever you are in the VectorVest world. We'd love to have you with us. We all get the US database and then our own country software. But for $9.95, you can try it out for 30 days. And with the trial of ProTrader, you could start doing some searches with moving average crossovers and with the surfs up and surfs falling searches and chart setups that Barbara has given us. Okay. Yeah, and Gordon, ProTrader is included with your real-time subscription, which is a real nice plus. You don't have to buy the add-on as long as you always have real-time. If you move down to an intraday or something, then you'll lose those ProTrader, Watchdog, and Auto Timer plugins that you get with real-time. All right, well, folks, gosh, what a great day already, and it's a beautiful day outside, I think, in many of our communities. So if you do go out, just keep in mind the self-distancing, and the most important thing is to take care of yourself and the health of yourself and your family. So that's the most important part right now. But hopefully this has given you a lot of food for thought and things you can try and see if this is going to work for your style of trading. Thanks, everyone, and always appreciate the wonderful comments that are coming in. Ada says this was highly informative, excellent presentation. So that's great. Love to hear that. Thank you, John, Tony, and Julian, and Jurgen. Thank you. Great to hear from you as well. And yeah, nice comments. So thank you very much, everyone. And thanks for joining us on YouTube. For those of you that did, I'm going to stop the streaming now and wish you all a great rest of your day and a great week next week. Thanks, everyone.